Yes, and we're live. How you doing, friends? This is Ernie, the Trader of Futures. I should say, no, this is Ernie with the Trader of Futures, and this is the daily stream. Why am I telling you this? You know all this stuff. Jeez. Anyways, I'm just a little foggy-eyed. Why? Because I fell asleep. That's why I'm late. Got involved in stuff. Started watching the charts. Everything's going good. I'm happy. I'm looking. I'm saying, Hold on here. Just getting things set up. We'll have to change that. To... Hold on. What I'm doing is I'm unprepared is what it is. I am looking for that. I must do a screenshot now. Getting the signals ready for you so we can go over those. All right, almost there. Da-da ding, da-da boom. Alright, it goes there. Bring this over here. Make it bigger. Adjust it. Pretty good. And move it over. I can move me over. No, I gotta go over here. There we go. Everything's backwards when you're looking at the monitor. Okay, where are we with big winners? All right, so let's see, from Friday and Wednesday. Wednesday, I guess, would be considered, today would be the last day for anything that occurred last Wednesday, because as you know, with the rules of our system is that we put out a setup, and in our view, a setup is very different from a trade. It's nothing more than a scenario, a what if. What if the market does this and reaches this level? Well, we would say, then you do this, because you do that, because the AI has said if you do that, you have a darn good chance of making some money. And so that's what happened. And if that happens, if you get that darn good chance, or if something is triggered, one of these setups actually comes to reality, then we say it's triggered, and if you're following this system, then you get into that trade. Either you buy, you sell, or you look for that breakout. And then we give it 4 days. 4 days, and if it does not reach its target, or if it's below its entry point, then we say, sayonara, that's enough for us. Now, of course, you have to, in the meantime, figure out your own risk tolerance, your tolerance for risk, your capacity for risk from your portfolio. Probably not advised to try to figure that out on every single trade. In other words, think to yourself, man, is this a 1 to 3 risk return ratio or something like that? No, this doesn't work that way. And that's because we're providing a large number of trades, and we can't provide that kind of information because we don't know what your personal tolerance or capacity for risk is. We don't know what size portfolio we have. We don't understand where your head's at, so we don't do that. We only provide that time stop and the odds, or something that meets our criteria in terms of statistical probability based on 20 years of pattern recognition and patterns that have a higher than average probability of occurring. And we present that. And then it's up to you then to provide your own kind of risk mitigation or management. But anyways, the one thing that we do is we say that after 4 days, after that, we don't have any other data. And so our recommendation is to just, cut your losses, get out, take the profit, whatever it is. And that's all. And we say that because that is what is tuned and built into the system, into the AI. It only looks with myopic view like this at patterns across 20 years of data. It's doing this, right? And then the patterns are flashing by. Kind of like that. And then every once in a while, finds a pattern. Finds enough of them, starts stacking them up, looks at whether or not they have an expected move. They're doing it over and over. Oh, the pattern here, pattern there, pattern there. This one moves this way, this one moves that way. This one's moving this way, this way, this way, this way. Like 20, 30, 50 times over 20 years. And so then our AI starts getting excited. Looks at that. Makes sure it reaches all our criteria. Pushes it up the stack. We sit there, pick them off the stack. Kind of like that. Then we would evaluate those. And then we put it in a list like this. If they all meet our criteria, if they're within a certain statistical variety, a 1 standard deviation or better, or certain number of ATRs, or whatever that criteria happens to be. It's a criteria where we see something happen over and over and over and over again based on some pattern. And it's not a pattern that we make up. It's a pattern that the AI makes up. And it makes up millions of these patterns. And that's really the beauty of this. It's looking at terabytes and terabytes and terabytes of data across multiple assets, all the Forex, all the futures, all the stocks. Although we're not doing all the stocks just yet. Over 20 years, and it's looking at, today's market, the last 4 or 5 days, last 20 days, last 20 years, what it looks like, and it sees patterns. And it's not like exact matches. It could be like, it's like, oh, it's like this, or it's like that, or it's like this, or it's like that, or it's like this. It says, man, if it's like this, then it turns to that. I noticed that, like, it happens like 40, 50, 100, 300 times over 20 years. Could be. If it does that again, might do that again. Pop it off, put it on the list. That's the technical explanation of the AI. Like most pattern recognition systems, they are machine learning algorithms. They classify and cluster data. These are very specific terms. In our case, the data is market data. It has knowledge it has either gained or learned, and it forms statistical extracted pattern representations. Or that doesn't actually perform that. What it does is it forms statistical information or extracted patterns. These type of systems are often used in things like speech or face recognition or medical diagnoses, multimedia recognition, document recognition, or virtually anything that has a crap load of data. In our case, it's thousands of assets and prices collected over decades. So, again, like I said, there's the classification, and then there's the clustering, where classification of data is kind of like a supervised learning exercise. It's the thing that we give the AI. We give it this kind of alphabet or lexicon of pattern snippets. And then it creates narratives from this. We give it some parameters, basic parameters on maybe how to put it, like a syntax or some rudimentary rules on how to put these things together. It then finds these clusters of data that kind of fit those rules and creates these patterns, and then starts looking at things and recognizing things and building a further library of knowledge. And that's what we call unsupervised training. Now, of course, requires a pretty powerful algorithm and a pretty powerful computer, and it's doing things that really no human can do, not even a group of humans can do. And so that's cool. So people ask, well, why don't you turn this into like a system and make billions of dollars? Well, first of all, it's not mature enough a system to be able to do that. I mean, this still requires, I would call this AI-assisted trading. Because even the trading part itself is still kind of an art. Just finding these things. The machine does most of that after our prompting and pruning and poking. And then it spits that out. But then it's really up to the people then to decide based on their account size, their capacity and tolerance for risk, their execution skills, to then take that information and then put it to work, put it into play, and then figure out how to manage the trade as it's, because we don't have a system that then manages the trade. The system doesn't do that, it doesn't manage the trade, it just gives us this sort of predictive analysis. That's all it does. So that's why it's not a system, complete end-to-end turnkey system. And that's why it is best presented as kind of a service, because it takes away what is generally the most difficult part. Well, that is assuming that you already have perfect execution skills and perfect risk management. It takes away the other most difficult part, and that's figuring out, whether or not something is likely to go up or down. And not only that, in a way that not just looking at one thing, but looking at literally millions of things through millions of different sets of glasses or myopic vision and patterns and other things. So what results from that is that each thing, each one of these lines up here, each setup is rather unique in that it came up because of a pattern that was recognized that may never come up again. Well, it might. It might come up, in a few months, a couple of years, next week, tomorrow. We don't know, but generally it's looking at these things and these patterns. It's very rare that, you might have one pattern that, gets hit like 5 times on different things. It's more likely that you have, I don't know how many new signals do we have since last night? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11 things there. It's most likely that we had 11 different strategies or patterns that were found. And then tomorrow we may have 10 or 11 or 12 or another setups. And they also will be all different and likely different than today's. And so on and so on and so on. And then every once in a while, one gets repeated. So what you have there then is a what we would say multiple non-correlated strategies. And that in of itself aids in the risk mitigation, because these things are being triggered on stuff that's unrelated to each other. That's the kind of cool part. That's what makes, trading more of these signals, the more that you can trade, the better. Now that obviously will bring you up against a wall at some point. You say, I want to trade all of them, but I've only got like $5,000. How do I do that? Well, you can't. You might say, well, I want to trade all of them, but I got $25,000. And then we say, well, okay, you're getting closer. I want to trade all of them, and I got 100,000. We say, yeah, you can probably trade all of them, no problem. Maybe 1 or 2 contracts each. So as you gain a bigger and bigger account, the more flexibility that you have. Of course, there are other things that you can do to try to act like you have a bigger account, and that depends on the form of the asset that you use. Like in Forex, they generally have 3 different size types. They have those that are 100,000 units. That's the full-size Forex contract by most brokers. They have the mini unit, which is 10,000 units. That would be like 10,000 of whatever currency that you have. And then they have the micro, which would be 1,000 units. So you can have very, very small positions or very large positions. Those large positions generally equate to approximately 1 contract on the futures side of a commodity. Most futures, for the longest time, just had one size contract that equated to, controlling $60, $100, $150,000 worth of underlying commodity for a few $1,000s of margin. Today they have a bunch of the currencies, some of the precious metals and energy, where they have what's called micro futures contracts that are a fraction of the size of the original contract. So now they're equated similar to Forex. So you can trade smaller and smaller and smaller. And with stocks, you always have the option of trading 1 share or 1,000,000 shares. So you have, but the leverage that you have is much more limited, more on what the broker will give you. Most brokers will give you 2 times leverage, which is very different from 40 or 50 times leverage in the futures market or the Forex market. Some people could apply options. That would be another way to leverage in the equities market, but that's usually not the best way, because using options just as leverage in the equities market, that's really hard. You got to really know what you're doing, because options are way more than just leverage. As a matter of fact, leverage from a professional options trader is just, one of the aspects, but it's not one of the things that they use in their analysis of the contract itself. It's usually time, the amount of delta or bullish and bearishness, and volatility. None of those have anything to do with leverage. So anyways, getting back to, a small account, it's possible to use micro futures contracts and substitute some of these, or micro or mini Forex positions, and whatever number of shares that you want to use in stocks. A really cool thing that's happening very soon, and I put this out on our Discord group, that I got a notice from the CME that says that in May they're going to introduce micro futures contracts for the indexes. So the ones that we like to trade a lot, like the ES, which is the E-mini S&P 500, or the YM, which is the mini Dow, or the NQ, which is the mini NASDAQ. They're going to have micro versions of all of those. And so, and we like to trade those. So that's going to be huge for people that want to be able to trade the futures and the Forex and the stocks. Because a lot of times we put out calls, and you can see even right here, we have NQ and ES. Do we have YM in there? I know we had a YM last week. So those will be on the table too. And then, smaller accounts will be able to participate in most of these signals. And like I said, the more you trade, the more you're going to naturally have risk mitigation, because you're going to be participating in this grander scheme of trading multiple non-correlated strategies. And multiple non-correlated strategies have a tendency, because they are uncorrelated with each other, to diminish drawdowns and be additive in terms of their profit, which is good, which essentially is a far out way of saying it smooths the equity curve. It creates less volatility in your equity curve, the profit that you make. Less ups and downs and more just going in one direction. So anyways, these are the signals from last night. And we can see in gray, those are the signals that got hit or triggered. Now, crude oil, it looks like that's a big winner already. You can see that, where is it? Well, it's way down here on the left, but what can I do here? You know what I can do? I can move this over. I can just use this. I can move that around really easy. And then I could like change that to CL like that. Then we can see it. All right. Oh, I know what I could do. I could take that here, and I can use the magic of OBS. I will add that as an image. I'll call that the setups, the AI setups image. Create a new image in OBS. We shall browse, and then I just have to update that image. Oh, that is so smart, Ernie. Holy crap! How do you do this? Look at that. Of course, now it's... See, now I don't need this one over here. I have this one that I can manipulate. Oops. This one I can manipulate, but see, now it's in front of my face. That might be okay for some of you. It's not okay by me. What I can do then is I can change its layering. And I just bring it down below the camera, like that. Pretty cool. So we can see that crude oil, let's take me, and we can reduce me. That might work out for some of you guys. Let's say we'll reduce me. Put me down here. There we go. We can see that oil, that was a signal that came out yesterday. It was a breakout call. Now we had another call from Friday, oil, to buy at 54,823. So let's take a look at where that would have been. So there's two calls that are like just recent. So we had the Friday call, which was buy at 54,823, which is down here. So here's Friday. And let's make this a little bit bigger so it's easier to see. I'm getting there. This is all new to me, so... Alright. So Friday... I'm using Thinkorswim, by the way. 54,823, which was right there. So that obviously triggered on Friday. So on Friday it triggered, and then the call would have been to get in. It drew down a little bit, but then it moved up. All right? So over the weekend you come back and you say, holy shit! Look at that gain in oil! I got it at 54.8. And then Monday comes along, and the market opens up, and you're $120, or I'm sorry, $1.20 up on oil, and you're saying, "Fuck yeah!" And then Monday comes along, and we say, "Well, we're not done yet, buddy. Okay, bucko. Now that you've made, $1.20, $1.30 in oil, we're telling you that today's." Look for a breakout of oil. You're still in this trade, and you're saying, "Oh crap, another breakout now?" And we say, yeah, break out at 56.52. Stop that. Right? And that's this line up here. And so what happened? It friggin' breaks out from there now. And so we're up on that too. Of course, once you get up here, what do? The target was 57.97. Did it reach that? No, it never reached that. But that one's still good for 4 days. So, do you take at least some of this off? I mean, you just made, I don't know, crap, all of this. I don't know, $1,700 on just one of the contracts, just one of the things that we're talking about here. Is that what you stick with? I don't know. Then we had NQ, the NASDAQ. That came out on Friday too. And that was a buy at 69.90, which is right about here. So mind you, these are calls that were made the night before. Right? So you got a something that came out at like 8 o'clock at night on Thursday that said, hey, if the NASDAQ, and on Thursday it was, well above there. It's like 50, 60 points above there. And the call comes out saying, hey, look, if the NASDAQ goes down here, buy. Buy below that 69.90. And it did. So here you are on Friday, and it drops down below there at 8 o'clock in the morning. It went up and then gave you another chance at about 1 o'clock in the afternoon. And either case, you could have been in on that trade. The weekend is over. You go into Saturday, the market's closed. You come in Sunday, and it's up pretty good. You're feeling good. You wake up this morning, and holy Christ! I don't know if that's appropriate. I don't have a beep. I don't have any way to, squelch my speech here. And it just friggin' takes off on Monday. And now here we are on Tuesday. What do? The target was 7,034. You think? That's way the hell down here. Oh. Sorry. Can I duplicate this? That's the target. I mean, you wake up on Monday and it's already well above the target. I mean, do you get out? Or do you just say, I'm just moving up my stop? Maybe I'll move it right up to the target. And then it jumps up like that. That's a case where we hit, I don't know, 100%, 200%, 300% of the target. That happens a lot. So what other trades did we have here? Stop that. So there was, natural gas. That was on Wednesday. Wednesday, natural gas was a buy. But it hit the target already. It went from $2.82 to $2.86. It went from 282 right here to 286 right here. Same day. Right there. So that was a good winner. Up. I have to come over here now. I'm sorry. So there's the is where you entered on Thursday. See, the Wednesday signal came out. Which would have been over here. It went up. It went down on Thursday. Went down below our entry. So we got in right there. Let's see. Yeah. I got to do this right here. So the signal comes out on Tuesday, good for Wednesday. Right there. Like that. So on Tuesday night, we get this, we're the NASDAQ's way up here. Right? And Tuesday night it says, hey, there's a signal way down here. If it hits there, we go long. And so we wake up on Wednesday and it hits. And so you go long. And you give it 4 days. And it went up a fair amount. And then it went down. And then went up again on Thursday and then hit the target and went above it. So obviously, you know, what would you do? Like any rational person, you'd probably, I don't know, put in a stop right there at above, maybe a trailing stop, anything above here, and try to capture any move above that. But then it came down, and then we were out. All right, so that explains all the calls that have hit targets. Those are the ones that were triggered and hit targets. So between those four right there, I think there's, I don't know, something on the order of $3,000 in gains. Why does that keep on happening? There's got to be an easy way. Oh, I see. So some of these have they triggered today? Got all these today. Ten-year note. Let's see. Let's check out the 10-year note. That's ZN. And that's a buy at 122. No, that didn't happen. 122, 148. Did that happen? Yeah, it actually did. Yep. Yeah, that happened. So the 10-year note was a buy. That came in right about there. Right about there. And that already looks like a big winner today. Rough rice, I'm not going to show that right now. I don't know the symbol on Thinkorswim. But gold was a buy at 1274.82. So what happened with gold? Did that trigger today? No, never got down there. But if you were still in the trade from last week, it's way up. So we got that. Feeder cattle, I don't know the symbol for that. The ES. That was a buy at 27.31. It never got down there. It never came back down there. Stayed up. EMD, that is the that's like the S&P, but instead of the biggest 500, it's the mid-cap 400. I'm going to say that probably didn't either. Euro dollars, that's an interesting one. That doesn't move very much. And the euro and cotton, and then of course some Forex. I'm not going to go through every single one of them. They're all there for you to look at. But tomorrow we'll do this again. We'll see what hit and what profited, and we'll have that listed in the gray there. And we also list what doesn't profit. That doesn't happen that often. That's the minority of the case. I shouldn't say that. It can happen. But our experience so far since we've had this service open has been, I think there's only been 1 week since October 1st that we've had a losing week. All the other weeks have been winning weeks. So that's pretty good. We might have had a few 2 or 3 losing days in 135 days. Something like that. That's a darn good record so far. Let's hope that we can keep that up. But it seems like the system that we have is certainly good. And again, I think it's because we have multiple non-correlated strategies that we have in play at any one time. Some make a little, some make a lot. Some lose some, but that's mitigated. And so, pretty good system. So I gotta know. I gotta wonder. You put out a service like this. I'm going to show. Last year, or when we first started this service, early last year, I showed all of these over and over and over again, and got a bunch of people excited. Why isn't anybody excited about this? Why do we get 16 people come in and watch this? Is it they don't want to make money? Is that it? They don't like a service that wins? They don't like one that has great support? They don't like the transparency? I don't know. It's kind of weird. Is the AI service alert only? What is that? What the hell does that mean? I'm sorry, I don't understand. Every night, and where there is a market the next day, so from Sunday, Monday, Tuesday, Wednesday, Thursday night, we email you something that looks a lot like what you're seeing up here. That's right here. We email one of these, and that's good for the next day. And you can take any one or all of the ones that trigger. You could set all of these up that night and hope that, or see if any of them trigger the next day or overnight. Set up the orders in your system, and then wake up the next morning and see what you got, and then manage what you have. That's how it works. They're scenarios, they're setups. And that's it. We put them out the day before. You can set them up, or you can wait the next day, and see what happens, and get into these or not. Some people paper trade them. Some people actually put real money to work. In any case, we have a survey of what people have thought of the service, and you can go to my website, my YouTube channel, or to traderofutures.com. The survey is right there on the front page, and there you can buy into the service as well. It's phenomenal price, only $125 a month. That's already been raised once. It started out under $100, and we said that's friggin' crazy. So I raised it to $125, and I'm looking at that and I'm saying that's friggin' crazy. So if you want to get into it, this is a good time to get into it, because once we start bringing in the introducing brokers and others, and we introduce this and start marketing it, and a lot of other people come in and want to take advantage of this service, there's just no way that price is staying at $125. Just no friggin' way. Not a service this valuable. So so there we show you. We'll show you exactly what we're doing every day. We'll show you what people think of the service. We have a Discord group currently, is the way we provide support. It's a live trade room where people come in, and we have my partner is there all the time. I bop in and out, and he provides fantastic guidance on helping people realize how to best manage their platform. He also does some discretionary trades in there, which have been just phenomenal, even outside of the system. Besides trading this, which that's his main thing, but he also adds additional trades every once in a while, and I'm not sure exactly how he gets those, but they're sprinkled in and out. I think he might be doing fewer of those, but we have a bunch of people that are in there. Right now there's about, 75, 80 people in the service. Again, we haven't done any marketing, but we're starting to do that. And that's going to be a very different story going forward. So if you want to take advantage of this now's the time to do it. You're required to purchase the training, which is 1 month. So it's basically you buy 2 months up front, and then it's the monthly payment thereafter. The reason for that is that we have to make sure that we level set everybody, that they understand how these things work, and how to best approach it, and give them all the information they need, plus other documentation and reference material that allows you to easily work with whatever platform that you're working with. So there you go. There's the Tuesday report. We shall see you tomorrow and do it all over again. I didn't talk about Bitcoin today. Darn. Maybe I should. Maybe I should look at it very quickly. We'll look at Bitcoin and see what losers are doing. The losers are doing nothing for the past 3 months. More. 1, 2, 3.5 months. 3, 4 months. Losers have been doing nothing. They've been going perfectly sideways, which they did for almost half a year before it dropped. So that's what losers are doing in the Bitcoin and crypto world. They're doing nothing. They are going sideways. They did that before, and then they dropped 50% of their value. Now we're going sideways for a long time. And my guess is that it'll probably drop 50% of its value. So they're the losers. They're the winners. And now I must go. Oh, this is interesting. AT&T now does this. Hello. I got 2 calls like that today from the Department of Social Security. And so AT&T now warns me that it's potentially a spam call. And they're telling me that they revoked my Social Security card, and I got to call them. Oh, my God. That's unbelievable. All right, so now we're done. We are done. Thank you very much for joining me.